here's what I'll tell you for sure. You got to stay rational. You got to keep a long-term perspective, and you've got to use the Rule 1 strategy that Buffett developed for the last, 60 years. It's been around for 100 years from Ben Graham and people like Warren and Charlie. And you just got to stay rational. You got to do your research. And just remember that the market itself isn't what we're watching. What we're looking for are specific companies that we truly do understand, have big moats, and we love the management team. We can buy them on sale. We're just going to wait patiently for that to happen. I think there's a rather decent chance, though, historically, given this 2% return on the year after the election, that we could see this thing bomb, basically no matter who gets elected. Now, if you think that's wonderful, it's because you're investing like I am or like Warren Buffett, who has $146 billion in cash and is waiting for the bomb to happen. And I'm sitting here about 60% in cash waiting for the bomb to happen too. Now, if it doesn't happen, okay, we're going to be chasing it with some trading. But in general, right now might be a really good time for you to start building a really good watch list and maybe think about getting some cash. If it starts raining gold because this market starts to crumble, you want to go outside with a giant wheelbarrow, not a little thimble. One of the
All right. Episode 8, Invest Info. We're going to talk about stock market crashes. And is the stock market crashing a good thing, a bad thing? What do we make of it? One, the stock market is always going to, what they call a crash or correction. It happens about every 6 years. The last stock market crash before March 2020, it was 2008. So over 11 years, we had a bull market. And in the long run, over the number of years, the stock market had more bull markets than bear markets, right? Now, Phil Town, he mentioned Rule 1 investing, something fathered by Benjamin Graham, taught by Warren Buffett, taught by himself, and it's a way of investing that I've adopted, which is Rule 1, don't lose money. Rule 2, don't forget Rule 1. And the way you don't lose money is you buy things that are heavily discounted. And stock market crashes create opportunities for discounts. I mean, if you look at what a stock market crash does, I mean, it really just drive the price down on a lot of stocks, right? But does it change the fundamentals? Does it change the value? And that's what we're looking for. We're looking for situations where, out of fear, people sold off their stock or some type of huge market correction that significantly drove the price down of a good business that didn't fundamentally change and still has a great value. It's trading at a heavily discounted price. That's very hard to do normally, but with black swan events, crisis opportunities. You have crisis opportunity investors. This is what they're talking about. They hope that this huge event brings the market down. They sit in cash, and they'll sit in cash for years. Warren Buffett sitting in cash. They'll sit in cash 10, 15. It doesn't matter. They're not pulling the trigger until they find an investment that meet the price of what they want. And they don't just buy stocks because it's cheap, right? You want to buy a wonderful business at a great price. Charlie Munger says. So Phil Town is talking about the coming election, that we might get a stock market crash if President Trump is reelected or Vice President Biden gets elected, right? Either way, it can happen. And, you're looking for an opportunity because remember, Wall Street is separate from Main Street, So Main Street is the current, the economy as we see it, but the market is forward thinking, right? So if you look at '08, when a lot of huge institutions like BlackRock and other major institutions started buying, they bought when time was the most pessimistic because they were forward thinking. Because 10 years later, with dividends compounding, they made a shit ton of money, right? Part of my language, they had a huge return on their investment. So this is the this is where we want to look at stock market crashes. We want to look at them as sales. Sales. It's crazy when you go into a store and people will buy something that they like when it's on sale. But when the market brings great valued companies on sale, no one wants to buy. They're afraid. The retail investor often does the opposite, which is buying high and selling low. Why? Because of their emotions and lack of experience. But Phil Town is saying, look, we have to be rational. And if you have bought in March, oh my God, I mean, seeing companies like Boeing fall from $340 down to 90, you get excited if you understand, the value of a business. But if you're owning that position and you seeing your stock fall from, $390, you'd sell out. So the coming market crash is not when you should be selling and being fearful. That's the best time to buy. When others don't want to buy, when the majority of people don't want to buy. Phil Town also said, look, if gold bars were selling at $5 outside, it doesn't mean the value of the gold bar is $5, right? That's just the price. So stock corrections and market crashes and crises that cause these stock market prices to bottom down, that's the best opportunity to buy. And when the market is constantly going up, that's when you want to be selling, because if things are trading high, relatively high, extremely high above their value, you want to get out of that, because as Warren Buffett says, when stuff, when companies are trading way above their value, eventually they'll stop giving you a great rate of return. Monesh also said the same thing about Microsoft stock. For 20 years, it didn't go up more than the stock pretty much sidelined for 20 years, but the investors around him thought it would keep going up. But he did his valuation and understood it was a time to get out. So, if you like Buffett, you like Phil, you like us here, we're hoping that the market crashes and creates even more opportunity to buy, great businesses at a heavily discounted price. I know there's particular stocks that you might be looking at now, and you say, "Man, this thing is really expensive. It's really I can't afford this." Stock market crashes and crisis events create opportunities for you to invest at a heavily discounted price. All right, so just quick invest info. If the market crashes, you seen your stock go down. That's a very telling sign, by the way. If the stock is going down and you want to buy more than you understand what you own, if the stock is going down and you just want to sell it, then you're like most investors, most retail investors, and we don't want to do that route. We want to go against the crowd. That's the only way we're going to beat the crowd and get a higher rate of return than the crowd. If this is too much for you, you could always just put your money in an index or I wouldn't recommend a mutual fund because those fees will kill you over time. But you could buy an index, an ETF that has exposure to a certain sector. These indexes own 5,000 companies. We don't want to go that route, but I'm just saying, if this investing thing is not for you, then that's the route you could go. So I think that was brief speaking on stock market crashes. They happen. They're reciprocal. If anyone told you that they predict the stock market crash, and they've been saying this for years, that person is often just trying to sell you gold or sell some type of fear. Or CNN often does this, and not CNN, CNBC always does this for ratings. It's going to crash no matter what. Market corrections are natural. They happen. When that happens, see it as a buying opportunity. All right, that was it on episode 7. Stock market crashes.